You know the pain when the market zooms off and leaves you standing behind like a statue. We're not doing that again. The truth is, the market never moves without dropping a clue first. Support and resistance are those clues, the footprints it leaves before the big explosion. If you know how to read them, you will see the exact moment an impulsive move is about to break out. So come close, let's go to the chart. Let me show you how to catch it before it runs. Today we're looking at the tools we will use to enter a trending market, the tools we need to catch the beginning of an impulsive move. If you have not seen any of those classes, you can check on this playlist right here so you can go through them and catch up on our previous lectures. Today we're looking at support and resistance, one of the tools we're going to use to be able to catch the beginning of an impulsive move. What is support and resistance levels? Support and resistance are proven areas where buyers and sellers find some equilibrium. They are major turning points in the markets. There are points where price was moving and it got to that point, it turned back. There are major levels of turning points. And most times we pick out these turning points from higher time frames. At every time frame, every level where price turn, there are support and resistance. But the major ones are gotten from the higher time frame, like the 1 week, the 1 day, the 4 hour, and the 1 hour. These are the major levels of support and resistance. So they are called major turning points, swing points. There's a reason why they turned. There's a reason. And most times when price return back to those spots, price will respect them and turn. Okay, so support and resistance levels are formed when price reverses and change direction. We are going up and suddenly it turned and started coming down, or it was coming down and suddenly it turned and started going up. Those points are called swing points. They are called turning points. They are called support and resistance. Now, basic way for you to think about support and resistance is like your floor and your ceiling. Where you are sitting on right now and your legs are on right now is your floor. So in Forex, we call it support. Where price is you, anything under you is called support. Any turning under you is called support. Then the turnings above you, on top of your head, on top of price, is called resistance. So your ceiling, think of your ceiling in your room as resistance. Where your lights are, they are called resistance. Okay. Price will often respect this support and resistance level. Every time price gets to those levels, it will respect it. It may not respect all the time, but sometimes it will respect it before it can break above it and continue going. So in other words, they tend to contain price movement until, of course, price breaks through them. Every time price approaches those levels, especially the big levels, like levels from 1 week, levels from 1 day, levels from 4 hours, when price gets to those levels, they stop, they salute, they say, okay, something happened here, let's slow down. Sometimes they don't stop, but most times they will stop, they will slow down, they will turn. Okay, so they are called levels of support and resistance. Where price is, any level of turning under it is called support. Any level of turning above it is called resistance. This class is for beginners, so we're always trying to explain it in such a way that you can just understand it in a layman's word. In trending markets, support and resistance are formed from swing points. So we also call those levels swing points, turning points, support points, resistance level. In an uptrend, the previous swing point acts as a support level. In a downtrend, the old swing points act as a resistance level. Let me show you what that looks like. So an uptrend, we know it makes higher high, higher low, 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 higher high. Okay. So this is what an uptrend looks like. And let's say the uptrend has started and it has just gotten to this level. It's just here now. So we want to know, how do we catch the next impulsive move? So this will be a swing, price turned here. So we are drawing out this swing, which will become a support because it's an uptrend. So the swing or reversal points. So swing becomes supports in uptrend. Okay, so we draw it out. Now price is making an impulsive move. Remember, we don't enter at the end of an impulsive move. We don't enter at the middle, we enter at the beginning. So it means we have to wait. One of the things you should be able to do in Forex is to be patient and wait for price to come to you. Wait for price to come to your level, come to your area of interest. It's like a trap. You wait for price to come into it. You're not chasing it. Okay. So now price has left us, that's gone, is going up. Remember, it's going to make impulsive move, it's going to make retracement. So as it's coming back to make a retracement move, we're already waiting with our swing to supports. So by the time price makes retracement and comes around here, most times price will turn and make another impulsive move. Sometimes it will not get to this level. Sometimes it will come around it and make an impulsive move. Sometimes it will pass it before it will make an impulsive move. That's why we call it area of interest. Our supports in an uptrend is an area of interest. I'm not saying that once you see this price makes retracement move and comes around support, you should just rush and enter. No, that's what I'm saying. Area of interest need a confluence. What is confluence? Confluence is having like 2-3 confirmations to say yes, go into the trade. Okay, this is just one. This is just saying, okay, price has come to my area of interest. I need to look for 1 or 2 other things to combine it to say yes, I cannot join the trade. All right. So you may see something like this. This is an uptrend. Remember, this is an uptrend, confirmed uptrend. Confirmed. We know that this is an uptrend, but we missed the first boss. So we want to join the second boss. How do we join it? We are using support levels in an uptrend. We get our support level from our previous swing points, which is here. Okay, so we draw it out. Price comes here, it does this, and it makes another impulsive move. So we are joining around these spots. We are joining at the beginning. So now, how do we get the next impulsive move? Where do we get the next impulsive move? This is the next swing that he made. We draw out our swing point to give us another support level. Support level. So we are waiting. That means we have to wait for retracements. So we wait for price. We don't rush in and enter here. We don't rush and enter here. No, that's not what we enter. We enter at the beginning of an impulsive move. So this is where we are going to. Price will come here, making retracement move. Then when it gets to somewhere around the supports, it can be here, it can be here, somewhere around, then it picks up to make another impulsive move. So this is like your first confluence that you're going to keep in place to use and enter the beginning of an impulsive move. This is just one. So don't be in a hurry to see it around support, you go and enter. It may not hold. There are other things we need to look at to combine it to say, yes, this is a very strong support. This will hold. Okay, this is the first one. So learn this one and hold it very well. As we progress, I told you from the beginning, market structure is a very big topic. So we'll be breaking it little by little into series. And price moves up, makes another impulsive move. So to catch the next boss, we go to our swing again. Bring it out. another support. Price makes retracement again, comes around it, and boom, another impulsive move happens. We catch the next swing to support, bring it out, support. This is around here, we're waiting. Price comes here, makes a retracement move, and from here it picks up. Okay, so let's go to the chart and look for an uptrend and see how we can pick out all of this. This is an uptrend. Like I said, for now your concern is to practice until you're able to master these steps. Before you use this system, make sure you are actually in an uptrend. So you confirm that you're in an uptrend. So to confirm this uptrend, we are going to check this HL, HH. So this is an uptrend. You don't need to be writing this in, but this way I'm teaching. As I'm teaching, I need to show you is an uptrend. So I have confirmed this as an uptrend. I have confirmed it is an uptrend for me. Okay, and it's making two movements: retracement, impulsive, retracement, impulsive, retracement, impulsive, retracement, impulsive, retracement, impulsive. So like I told you, trends end. It will get to a point where the uptrend will stop and begin to come down or consolidate for a while. Let's say we made this uptrend somewhere here. This is our swing. This is our first swing. We'll draw out our supports. Okay, SP1 support. So these are our supports. Now let's say price does this impulsive move, made retracement, does impulsive move. We are waiting for it to come. So you see price came back, it didn't touch it, it came around it. Like I told you, price can come around it, price can touch it, price can pass it, but it's somewhere around. It's called area of interest. And you see that price came around and immediately it started a new impulsive move, which is where we are supposed to enter, the beginning of an impulsive move, and it moves straight up. The beginning of an impulsive move. Price came around it and started a new impulsive move and went up. So now we said, in case you have missed this one, or people are taking profits here, professionals are already taking their TP around here. So you don't see this move now and jump in that is moving up. If you jump in, it will take you out somewhere here, then it will start moving up again. And you'll be wondering why is the market against you. Okay, so it came around this support level. So this support level showed us that another impulsive move is about to happen. So we took that one, went up. Now the next impulsive move, we have to look for it. How do we get it? The next swing point, which is here, take this swing point and you bring it out, bring out the supports, swing to supports. In an uptrend, we are looking for the supports. In a downtrend, we are looking for the resistance levels. We are uptrend now, so we are waiting for it to come. And you see price came down. It came down and it came around this our SP supports. And you see another impulsive move started and went up. We joined at the beginning of an impulsive move. We caught another one. So the next impulsive move we're going to catch is from this SP, from this swing, which will now, if we bring out, will become another support. So when price is making an impulsive move, it means that we have to wait for this price to come down. And price came here, made an impulsive move. You see, sometimes it will not be on the line. It may be under it, like here. It may be on the same line. It may be above. Okay, so price make another impulsive move, and around this area, which is our area of interest, we combine it with other confluences and we enter the trade to this level. Okay, now we're waiting for another impulsive move. We take this swing again, swing to support, draw it out, See, SP. This one is sitting, wait for retracement. It came down and came exactly on this swing to support, and we caught it to take another impulsive move up. Okay, and at this point the impulsive move, the uptrend, begins to struggle at this level, which is something I'm going to teach you later, how to identify when a trend is exhausted, a trend is tired. I'm going to show you that in other series. So for today, what we have done is how to get the beginning of an impulsive move, and one of the tools that we used is support levels. Swing to support to catch the beginning of an impulsive move. So let me quickly show you what it looks like in a downtrend. For a downtrend, we see the lower high, lower low, lower high, lower low. So a downtrend, this is a confirmed downtrend. We have seen what we wanted. Okay, so the first thing you need to confirm is to be sure that it's a downtrend. Then you can now proceed to picking out the impulsive move. I told you that for a downtrend, it is swing to resistance. For a downtrend, we are looking for resistance levels. For uptrend, we are looking for support levels. So now we are going to look for swings. Swings are turning points where price turned in a downtrend. So we are going to look for the swing so that we can catch the impulsive move. If you are still confused about impulsive and retracement, the video that is before this one is the video you need to watch so you understand what we're talking about. So what do? We mark our swing. Let's say we are starting from here. We mark our swing and we draw it out to give us resistance. Okay, so price made the impulsive move. Okay, now it goes back to this area of interest. You see, this is very close to it, and here it starts another impulsive move again. So that's how we catch the beginning of an impulsive move. We take our profits and wait for the next impulsive move. Remember, after an impulsive move, there will be a retracement. After impulsive move, you get a retracement. So how do we catch the next impulsive move? We draw out our swing to resistance, and price came close to it, not very close, but around it. Like I said, this is an area of interest, so it will not be exactly in that particular line. So this is the last one. It came close. Because of other tools of confluence, we'll be able to get this first one. So it makes an impulsive move. Now to get the next one, we mark out our swing to resistance. So price came up and did a retracement and came around our area of interest, which is here, and gave us another beginning of an impulsive move, which is this one we're entering. Okay, now to get the next one, we bring out our swing to resistance and wait. So price came around it or very close to it or touched it and gave us another impulsive move. So we are entering only at the beginning of an impulsive move. That's how we are catching the trends as we are trading. Okay, now to get the next impulsive move, which is this one, we've already caught this one, is gone down. To get the next one, we bring out our swing again. Swing to resistance. We are downtrend, so we are looking for resistance. Price did a retracement and came around it again, and boom, we got another beginning and it came down here. Then to get the next one, this is where we are going to draw swing to resistance. At this point, there was consolidation, so it took its time for it to drop out from this level. This is how we catch the beginning of an impulsive move in a downtrend market. So remember, in an uptrend market, we are looking for supports. In a downtrend market, we are looking for resistance. Okay, if there's anything you are confused about, maybe you don't understand it, please go to the comment section and ask questions. So this is one tool that we use to catch the beginning of an impulsive move in a trending market. So in the next video, I'm going to show you another tool we're going to combine with this one to use and catch the beginning of an impulsive move. All right, so see you in the next class. If you have not watched the previous classes, please just go back so you can flow with us. These classes will be broken down in small series to help you grasp this whole market structure that we are talking about. All right, see you in the next class.